Neva. So today I'm going to talk about the top 3 misconceptions that people have about their house going into foreclosure. And number 1, this is the number 1 thing that people are always saying is, oh, why would the bank foreclose when they are going to lose money? Stop it. Stop saying that. Stop saying that. The bank does not lose money when they foreclose, okay? Get some coffee, I'm gonna get some tea, come and sit down, and I'm gonna tell you how they do not lose money when they foreclose, okay? Let's say you have a house right now, your loan is $300,000, okay? The house goes to auction, it sells for $100,000 at the auction. So there is a difference of $200,000. So does the bank say, we just gonna have to take a hit, girl, we just gonna have to lose 200 grand? No. Number 1, there's a difference between the servicer, which is who you've been sending your payments to, and the investor that owns the loan. The servicer doesn't lose any money when your house forecloses, because when the house forecloses, the servicer takes their fee right off the top. So that $100,000, the servicer takes the fee that they were charging the investor to service the loan. So the bank, Wells Fargo, Bank of America, they wouldn't be losing anything in that situation. They don't lose any money because the investor was paying them like a small fee to send you your statements, collect money, and then send your mortgage payment to the investor. So they take all their service fee when the house forecloses, okay? So now, okay, Bank of America took their money, Wells Fargo took their money. Does the investor say, oh, well, I just lost my 200,000? No. Right? Virginia does not have anti-deficiency judgment law, which means that after your house forecloses, that the investor can come after you for that $200,000, okay? Now, majority of people that the house foreclosed applied for a loan modification, because people are always like, why did they let me submit all these forms? I faxed and refaxed stuff for months, and then they foreclosed on the house. Pause this video and call your bank right now, and you will hear a recording. And what does the recording say? The recording says, we are a debt collector, and all the information that we obtain will be used to collect on the debt. So for the loan modification process, you submitted bank statements, they have your checking accounts, your savings accounts, you submitted pay stubs, they know where you work, you submitted tax returns, you submitted all your financial information. All your financial information you've submitted. So for the investor to now come after you for a deficiency judgment, all they have to do is take your file that you just sent them everything in the loan modification package that you freely gave them and give it to a collection agency to collect, okay? The other way the investor gets their money is mortgage insurance. A lot of loans have mortgage insurance. And even if you were not paying a separate like PMI payment, a lot of loans, mortgage insurance was wrapped in the rate originally from whoever like your loan officer or company was. So mortgage insurance, when that house went to foreclosure, remember we said, okay, you owe $300,000, it went to the auction, it sold for $100,000. Mortgage insurance would give the investor the $200,000 that they would lose, okay? And the other third option that the investor will make money is, here in Virginia, we have a lot of military, and military, they use VA loans that are backed by, they're backed by the VA. when a VA loan goes to foreclosure as well, VA would pay the investor that $200,000 that they would have lost because they backed that loan. So can somebody tell me why in 2018 people are still saying, oh, why would the bank foreclose? Why would the bank foreclose? Because they're gonna lose all this money. Where are they losing all this money? Can somebody please tell me? Once you stop making your mortgage payments, your mortgage, the account is now assigned. It's basically the name it is. It's non-performing asset, right? It's a non-performing asset, meaning this loan is not performing anymore. We're not receiving payments, right? So the reason it's an incentive to foreclose, the bank wants to keep the percentage of non-performing assets that they have. They want to keep that low, okay? The reason they want to keep that low is as the level of non-performing asset goes up, the bank has to take cash and increase their cash reserves, right? Well, the bank, their goal, none of the banks in the United States, none of them have a goal of keeping people in their house. Their goal is to make money. And so if they're increasing cash reserve, that means that they're not lending and making money on that cash. They're not making profit on that cash to lend it out and make interest on it, right? So they want to get rid of non-performing assets. So if you stop paying your mortgage, the bank just wants to be able to say, girl, bye. You know, they don't want you around for 2, 3, 4, 5 years. You are a non-performing asset, and they have to increase their cash reserve as long as they keep this non-performing asset. So even if all things considered, they were not going to get the $200,000 that they lose at auction, they like, girl, bye-bye, because I'm not going to keep increasing my cash reserve and keep this non-performing asset around. I need to be able to keep lending and making money, lending and making money, lending and making money. My goal is not to keep all of America in their home. It sounds so harsh when I say that, but hey, it's just what is that? Simple economics. I was meeting with a young lady the other day, her and her husband. They're like middle age or whatever, let me not say young. And their house is going into foreclosure because the second mortgage is in default, is behind. And she said to me, she said, our lawyer told us that they are probably not going to foreclose. She said, oh, they told us that they probably sent the auction date to scare us so that we can start making payments again. I was like, what? I told her, I said, that is not true. And sometimes I'm in communication with people, and when they get the auction date, I've heard several people say that this is just to scare them. They don't really understand that here in Virginia, when you get that notice, unless you act and do something, your house will be sold at the auction on that day. There's no bank that is sending auction or setting auction dates to scare you so that you can start making payments, because when you are in pre-foreclosure here, they don't even, the bank stops accepting payments from you, okay? So if you send in a monthly payment, like say this was her second mortgage, I told her, I said, if you send in a payment right now for like $450, $500, whatever her second mortgage was, they're gonna send that payment back. They're not gonna take that. The only payment they'll accept is if you reinstate the loan. And to reinstate the loan means you need to pay all the arrears, all the payments that you have missed. So if you've missed 10 payments, 15 payments, 24 payments, you would have to pay all of those payments at once in a lump sum to reinstate the loan, so that the bank says, okay, this will reinstate the loan, and then after that you can start making your monthly payments again. That letter, that auction date, you need to act before that auction date comes, because when that auction date comes and your house is sold, you know, that's a wrap. Here's what I want everyone to get. If you're in pre-foreclosure, remember all the other things I just said about deficiency judgments that you would owe after the house forecloses and things like that. When you're doing a short sale, that is what you're doing. You're negotiating, or we're negotiating on your behalf to have the bank forgive that deficiency, right? Meaning when that transaction is done and completed, you walk away with your life again. This problem is resolved. No one will be coming after you again, or you know, you're not at risk now for your wages being garnished 2 or 3 years from now or something like that. So you are walking away with the ability to start over. And like I said, and then you can just buy a house in another 2 years. See you next time, and remember, as always, to hit that red button and subscribe. Bye bye.